if you like to do the investment, you can actually do it DIY, but you still do it with, and that was surprise to me. When you bring a good product to the client, you can't make money, can't manage everything. The best of your investment and the worst of your investment. You should be constantly aware what's happening. Sometimes it is not the course, it is that person. Like Simon Sinek, I wanted to organize it is $100,000. So are you capable enough to take that knowledge? So every day, just try to become little better.
Good morning, Bhuvanji, and welcome to the first episode of Wealth in Focus, where the idea is to guide and know you more about your philosophies in wealth management and how you make money for people.
Thank you, Rajesh ji. I'll say it's great to be with you because I consider you as a seasoned investor who understand the basics. And if you like to do the investment, you can actually do it DIY, but you still do it with people like us. And I think you're one of the informed investors. So I'm sure a lot of things I am going to learn as well from you. So thank you.
Looking forward. So let's start with your journey. How did you actually get into this business of fund management and helping people manage their money?
Okay, so first of all, I will tell you that I always want to do business. In fact, I flunked my MBA interview because I told them that I would like to be an entrepreneur after the MBA.
Okay.
And that was a surprise to me. Then it has to happen because I always believe it is not me. Like we talk about genes or the chromosome theory. So my grandfather and my great-grandfather were very renowned business people.
Mm-hmm.
And there was a saying that we used to have a Rolls Royce that spoke tires. I've never seen it. And there was a very humble beginning. Father was the first government servant in the house, and he was actually against business people because those days businesses were more about corruption, about giving and taking bribe.
Yeah.
So obviously we got into job, but that genes, or you can say kida, that was always bubbling through. Every weekend we will become businessman and discuss about businesses, that how this restaurant is full. And like that, I was lucky to do my MBA in finance and then got into a local bank. And roughly 11 years I worked with that bank.
And this was in India?
This is in Dubai.
This is in Dubai.
So I worked with Rag Bank and I learned sales. And my boss was praise of me, though I am from non-sales background. And doesn't mean that I was the only one doing well. There were a lot of other people who also did well. But I never looked outside because I believe I have to be successful in this job, and to taken a couple of promotions and learned one thing, that client is the asset. The CEO, CIO, they work exceptionally, but majority of us, they do not have a career growth. A lot of people come to me thinking that what will happen to me after 6 months, 1 year, 2 years. I said, you will decide. So the great thing in the business or the entrepreneurship is that you decide your destiny.
Absolutely.
I think you know better than anybody else. So at the end of the day, if you serve a client, you have some money in the pocket. Even if $1 is saved in a month and time is at your hand, nothing is bigger than that.
Oh, absolutely.
So one thing I realized, that if you speak truth to the client, which is difficult, not easy, then the journey is very simple. So we started with insurance, with finance. I was lending money to people and have an Excel sheet calculating 200 dirham, 500 dirham, 1000 dirham.
Okay.
And one fine day, I got a good money from the introducing clients to the bank. And that confidence in a middle class person comes, oh, you can make $20,000 a month. Oh, you can make $85,000 a month. Now I realize that everyone is representing a company, a product. The gap is nobody is representing a customer. And in our field, it is even more important.
Right.
So we started with the name client first. And when I went to my father for blessings, he wanted me to keep a name in the name of goddess Lakshmi. And I couldn't say no to him. So I went to the authorities, and the authorities said, no, we can't give you this name. So it has to happen.
Okay.
And today I'm happy that not only my company, even my brother's company is client first.
Oh, nice.
Yes. So this has to happen. So
And that philosophy continues.
The philosophy continues. So and that is why the performance fee model, I'll say that everything what we earn, and that's the good part about it.
Correct.
And that is why I think we have a family. So I don't believe that I will take anything with me. And there are a lot of things to tell people this year. So this journey started with insurance and then finance. Then I saw the insurance business. The problem in the market is everybody puts in a lot of effort, but at the end of the day, client looks for a pass back.
Correct.
The reason we were in insurance is not for the commissions, for serving the people. And we have claims which we have paid. And those are the beautiful thing to happen, because ultimately, why do you take insurance? And today, we all know the need of the insurance.
Absolutely.
Yesterday, I had somebody in my office and he lost his whole business in the flood in Assam because he has not taken insurance. The only challenge in the insurance is we follow up with people, and after 12 months, they'll call us and say, please come and give us insurance. And the reason is somebody in the family or a friend had some casualty.
There's something unfortunate that's happened.
So the visibility is not in your hand. You are more like a broker.
Correct.
Then we come to third-party distribution because we understood the equities. And equities are an amazing way to make money. The problem with the when you bring a good product to the client, you can't make money. Client will make money. The manufacturer will make money. Like say a very good private equity fund, which closes in 7 days. So I would like to take that product to you or bring that product to you. The problem is middleman cannot make money.
And why is it so?
Because the product is that brand is so, I think you will understand this from the tech example. So let's say a CRM system. The companies want us to introduce them the customers. The best CRM system, let's say HubSpot, they will pay a middleman 1 year fee. After that, they don't pay you.
Correct.
A very good example I'll give, like Beehive. So Beehive was a great company for SME lending, but they won't pay us after the third or fourth referral. So stickiness is not there because they have the books. You as a customer, all you want is lending. Once I introduce you to them,
So then they become their customers.
Correct,
and it goes more direct.
think this way. So if you are let's say you are a corporate banker and you have a big finance book from the bank, will you get paid every year on the interest what banks make? The argument is that bank owns
the customer.
the money. The bank owns the money.
The
So
money. Yeah,
money is
absolutely.
key.
Correct.
But in the investing industry, this is not the key. In that we own you. You deal with us.
Correct.
Though money goes into investments or equities, but the stickiness is very, very much there. And if you train your customer right, then I think it is 95% of the customers stay next year. So I believe we all are running extra. If we start thinking that let's sacrifice the upfront and let's build a model which is partnership model and you earn with the client. Something very similar to LIC. The only challenge with the LIC is that the money doesn't grow. So that client first is true, and then we realized that we have to become that manufacturer. So then we started working on our own product in 2019, and slowly today we are here.
Super.
Yeah.
So we'll drill down more on your journey over the last 6 years over the course of this conversation. But let me start with something that is there in everybody's mind today, right?
Sure.
Most of the investors globally, they say that Trump wakes up on one side of the bed and the market changes, right? So what is your view on the future of US as a market and US dollar as a currency? Where do you think it is heading?
Okay, so in the 80 to 100 years, a country loses its dominance. We can clearly see that the dominance is being challenged. At $35 trillion economy with a $38 trillion debt, where China is coming at $15 trillion GDP, it is being silently challenged. We may look at how US is reacting when yesterday Canada and China has signed a treaty on electric vehicle. No doubt, in a lot of industries, including electric vehicle, China is the best. I have just tested a car called ROX 01. I'm amazed. So just to ask you a counter question, that ROX 01 is a car worth, let's say, and I think they're getting free marketing here, $70,000 car.
Okay.
And the mileage is 16 kilometer per liter, and it is roughly close to Defender and Range Rover. They have an other luxury version, which is ROX Adamas, which is roughly, let's say, $85,000. So I just told you that 1 liter ROX 01, which is the lower model,
The 16 kilometers.
16 kilometer. Any guesses what Adamas mileage will be?
Either around the same or maybe 18-20.
Yeah. So see, you are actually thinking that the luxury model
Should give you more.
Should give you more. And you're right. It is 20 kilometer per liter.
Wow.
Now, as an Asian, like Chinese and Indians, we always ask, no, Maruti mein kitna degi?
Absolutely.
And that's exactly what they're delivering. And they're just 5-year-old. Just 5-year-old, they have sold 25,000 plus cars, I think. 10 or 25,000 cars they have sold. It's the third largest selling car in the UAE right now. So where we are, China, I always tell people that if you look around, like if you look here, you might see a US brand, you might see a European brands. So they're like body. But inside it,
It's
the
also-
soul is China. So Buffett and Charlie Munger are sitting here. I bought them from the Berkshire Hathaway conference. But when I turn it over on the pack, I saw made in
Made
China.
in China. Yeah.
And US, if you go to Niagara Fall or anywhere you go, it's made in China. So Buffett said that tariff will not work. That one line is enough. So who do you look for guidance for? So while I congratulate Trump because he's trying to execute his mandate, his mandate is to make America great again. Now, how will he make it? I don't agree to those, but who am I?
Correct.
Today, I tell everybody, if you have made good money, just watch on your head. A helicopter should not come to you. So it is a time that do your part, because one more thing should surprise you, that Elon Musk and Trump had a fight, argument, and then he left the government, and then on 31st December they had dinner together. So what is cooking, I don't know, and I don't want to know. All I want to know is that if you are with the right people who know their job well, so at the end of the day, every day what you do, you make sure that you have some cash flow. At the end of the day, what we do, we look for a cash flow at lower risk. We always say our investment is low risk, high return.
High return.
And high means 15, 20. Some people for 15 is less, so that's fine. So my view on dollar currency, yes, it will lose the dominance. They're trying their level best. They have gone to an extent that now they've become the mercenaries, which they have always called, which is not right. Because if China start doing that to Taiwan and Russia does it to Ukraine, or let's say India does it to Pakistan, will America be okay with it?
Yeah, that's
So-
a question I think everybody is
Right.
thinking.
So now think from so leave politics for a moment, and now think how UAE operates. It doesn't talk. It does it. Like Dubai, I think one of the video I watched, and they said, you are busy in something, tariff. We are busy in construction. So at the end of the day, build a model that people will come. So what will happen? So let's say I invested in a company which is in US dollars. And right now I'm importing from outside because US is costlier place.
Right.
We all know it. So on the purchasing power parity, US is roughly 1:1.5 to 2, in fact, is compared to UAE. Now, if US currency or dollar falls significant, like in 2008, it fell to 78. Right now, it is at 98 plus. So it is still great.
Right.
And still the gold is going up because of the geopolitical reason. So what will happen? We'll start exporting goods from US. And US will start working, like labor will be cheaper, so we'll employ US people and we'll sell to a market which is costlier. So the economics will flow. You're not buying from China, you're not doing any favor to China or India. You don't get that talent the same price. So even if you increase tariff on H-1B visa, I think NVIDIA's CEO said that we'll be happy to offer the call. It was a very small amount as compared to what kind of market cap they have. So I don't see any threat. I don't see any problem. As long as we understand how cash flow works, we don't have debt. If we have debt, by the way, people think I'm against debt. I'm not against debt. There are multiple types of debt. So it depends the nature of the debt. The debt is good. But are you that disciplined?
On how you're using that debt for the purposes of growing the company.
That's one thing. I think, Rajesh, you understand, if you and I take a loan, it's not fixed. And we have to pay principal every month.
Right.
With a part of the EMI. And if you calculate, let's say you buy a car at the let's say EMI of 3 or 4%, which is actually 6 or 7%, but they tell you 3% flat. So you don't understand. We don't understand exactly what we're paying. Now imagine if you put that money into stock market, you have to deliver 40% to pay the EMI because every month you will be paying principal.
Alright.
That money will not be available for you to make money.
So the opportunity cost of
Correct. Now,
losing
let's say Amazon takes loan. It's available at 3 to 4% for 10 years. So they all have to pay is interest for every year at 3 to 4%. Now, if that kind of loan you get or you take, then interest loan makes sense. So in the capitalism, this is always a challenge that bigger gets bigger opportunity.
money makes more money.
Correct. So if debt is of that kind that you have 5 to 6 years to breathe, the interest rate is fixed, then one should take it. And we're building that kind of business now. But people like, let's say you and I, we don't even get an overdraft on our property.
Correct.
So that's what the whole case is.
Yeah. So let's move to, there's always a big saying that you should not put all your eggs in one basket, right?
I'm against it.
Yeah.
No, I'm against it.
You're against. You think that it should all be in one basket?
Yeah. So I'll give you this one. So first of all, let's understand the eggs in the basket. Now, when you do not want to put all your eggs in one basket, you're saying that one egg has to be of, let's say, the ostrich. One egg could be of duck, etc., etc. Now, obviously, we all like to fancy and go and eat outside different food. But at the end of the day, if you want to be healthy, the khichdi is the best food or the staple food. So if you want to make money, it has to be boring. So now, let's say you have these different eggs. You have to understand all these different nuances because you want to make money.
Right.
Now, I know a lot of businesses who made great money because ostrich egg is very costly. Ostrich meat is very costly. So just have an ostrich farm and you make money. Right. Now, people who have chicken farms, they'll only have chicken farms. They'll do mass market thing because it is not a niche business. So this is how people work it. Now, I'm just giving you this analogy because we discussed the all eggs in one basket. Now, all Asians, when they move cities, I did the same thing. So I was in Pune first. So I bought first property in Pune. Then I came to Dubai. I bought first property in Dubai. Then I realized that Dubai is very costly. I bought a property in India. My father said I can't manage in Dubai, India, so I'll manage in Raipur.
Right.
Now, having said that, these eggs are so many different eggs in different baskets. Nobody ever understood what we have bought and why we have bought it. It is just that we thought property by default will go up. Now, it happens in Dubai for so many reasons, but it doesn't happen in the world.
Correct.
So now what happens? It is very difficult to manage them, one. And the liquidity is a challenge. So now, think about your journey. Each city you have worked in and people who have come from a small city, when they move, they buy property in every city. And I had a good friend of mine and he tells me I'm going to Bombay. I said, why are you going to Bombay? To sign the property lease. I don't understand. To sign a 10 lakh rupees property lease, all the way you fly business class and go there and sign. So either he doesn't know how to do it or probably this is the way it has to be done. So now imagine you have all the properties in one particular place and you have taken them carefully and now you are able to have a watchman or a, let's say, company itself for it. It is very easy to manage. You got discount also because you bought all of them together. So what do we say is that put your eggs in one basket and that those eggs should be quality eggs, like 15% in our case. Beat property, beat equities, beat commodity and watch them carefully.
Understood.
This has been
so let me break this into two, right?
Yeah.
So one is your eggs could be different, which means your source of funds or what kind of money that you have money to keep for long term, short term, those could be different eggs. But what I'm referring to more is different baskets. Say, for example, diversification in terms of geographies. Should I focus all on US or should I look at US, India, Asia as a market? A lot of things are happening. And two is then asset classes. Should I be focused more only on equities or should I have equity, debt, commodities, crypto, and so on and so forth?
So first of all, you need to understand that the focus should be not these things. Focus should be risk and return. In the short, what do you want? Short term, you want low risk, low return. Short term, you should not look for low risk, high return.
Okay.
Because if you're going to do that, you're definitely going to lose money. So how people lost money? Without taking names, they go to NBFCs in India and they were delivering more than the fixed deposit return of the good bank. So what does the difference make? On $1 million, if you get 4% or 5% in a good bank or a great bank, you might get 6% in another bank, which is high risk. Short-term money is not to be not to risk. Now, in this regard, I will say that the short-term money should be only into good bank and fixed deposit, or let's say a good banks or a good company's bond. And in the bond, we'll always go with the credit rating. Triple B minus is the lowest investment grade. People have lost more money in bonds than equities because they had tried to be greedy and want to make more money in the bonds by taking the lower risk. So in fact, you will be surprised to know that people have lost money in the Chinese bond. Okay. Now, the long-term thing. Now, long-term, again, what is the risk you want to take? Now, cryptocurrency is high risk, in my opinion. I have tried a lot. If you can explain me, please explain me. I have never understood it. And the simple thing I did when somebody asked me, I went to the one of the AI software and I asked it to give me 10 companies, the top companies of S&P 500, how much cryptocurrency they hold in their balance sheet. Except Tesla, none of them have it. So if the brilliant minds of the world do not have it, I think we should leave it. So now coming to diversification, when you buy an American company, so let's say you buy Amazon, let's say, or Apple, that company itself is 50 companies or 50 divisions. So in Amazon case, you know Blink, Ring, which we all use, it's again Amazon company. You talk about the Whole Food, which is the organic food outlets, retail outlets in the America and across the world, owned by Amazon. AWS, which is the fastest growing or the biggest data center, which I'm sure the cloud center, again Amazon. Then the fastest growing grocery in the world, or the biggest grocery in the world, Amazon. The advertising business, which is the third largest business of Amazon, again Amazon. Now, when you buy one Amazon company or a stock, you're not buying US. You're buying the piece of the world. And you're buying piece of these businesses. So you're already diversified 50 companies. So think about it. The richest people in the world are actually concentrated bets. And where I might have 10 companies in the portfolio, they have only one.
But then you need to have that conviction or that research that has got you to that stage that you've been able to.
So diversification is against the ignorance. So you should diversify. If you lose your sleep because of, let's say, the fund manager, let's say because of me, you're losing your sleep, then you should diversify. But diversify doesn't mean diversify, that you go and put in money in 5%. Because inflation will kill you. And we all know that real numbers are something else.
Correct.
So you need to diversify so that you should not lose your sleep. So I'll give you an example. So we sold a company in our portfolio just now because the stock started owning me. So it was 45% of the portfolio. There is no change in the company's fundamentals. We're happily seeing it 5 times or 4 times from here. But we still sold it because if it went down for even temporary basis, it could have been havoc in customer's mind. So to do customer liability management, we sold the stock and brought down to 20%. So we know it in detail. And I have a very simple thing that you can't manage everything. The best of your investment and the worst of your investment. You should be constantly aware what's happening. Best of the investment so that you do not miss the selling point. The worst of the investment so that you do not again miss that it becomes zero. So you might want to put more money there or you want to exit. So both are important. That's how you manage the diversification business. Now let's say you don't have time. Put into S&P 500, put into mutual fund. In the mutual fund, you will never know what's happening. All you have to see the track record, listen to the fund manager, and if you are an evolved person or you have, let's say, people like, let's say, advisors are there, you may choose them. So you're so this is no one size fit all remedy. Everybody is different. Yeah.
You talked on advisors. I'll come to that as my next question. I'll just finish this concept of diversification. A lot of retail investors who are, say, committed to mutual funds or equities and asset classes of that nature, all of a sudden saw the rally in gold and silver. So the thought process that came in was, did we miss this rally? Should we have got invested in commodities as an asset class? What's your view? And generally on gold and silver rallying, do you think this is a rally that's going to continue, stop, go down? It's a guess anybody could have, but basis your understanding of the market, what do you feel?
Okay, so again, I told you we are low risk, high return. So we don't have gold in our portfolio. We don't buy commodities. Yet we made a lot of money. But indirectly, we have a lot of gold exposure because I believe in people. So What made more money, gold or Titan? So Titan made Rakesh Jhunjhunwala
Super.
roughly 30,000 crore rich. Out of 50,000 crore, 28,000 crore plus he made only from Titan. Now, if you would have bought gold in his portfolio, you would have made probably 100x. So these are cyclical play, not for everyone to have it. Coming to gold, we are very biased towards gold. We buy gold without even seeing the prices. I have a lot of personal experience I have, you must be having. A lot of people I know, they travel from Dubai to India. They just buy gold because the wife would like to see him coming with gold. Okay, they don't have a selling plan. Now, I'm happy in the ignorance, everybody has become rich in India or in the Asian countries because we buy gold for...
We
don't,
hold.
Yeah.
Literally
We don't
hold.
have a reason to
Correct.
actually buy. We just want to buy gold. And I don't know why that yellow metal looks very good to everybody's mind. Now, coming to this FOMO, which is happening right now. So why is gold going up? Obviously, one reason what you mentioned is politics. So if you will threaten people every day that if you are not with me and if you are not letting me acquire Greenland, I am gonna put a tariff on you. So I will be trying to diversify myself. The gold is going up because it is not under the purview of US to control it. They can't print it, and they only can put more tax to it, which will actually take it further up. Silver has an industrial demand, where, as you people know, that data center. I think data center story, EV story, solar panel stories all link with the silver and the copper. So the commodities are linked.
Right.
Now you may be an expert to buy these commodity mining companies to make money, or you would like to buy commodity which we don't do. So now retail investor want to feel happy. What are the ways to be happy? Join a satsang, have a drink, or third thing is to do some activity. So there is a saying that khali dimag shaitan ka ghar. What will I do? Since morning I'm sitting, I have some money. I'll either press a button. If I do not believe in the non-physical, I'll go to the market and buy a physical silver or gold.
Yeah.
Feel good about it. Right? So I believe that gold story is over. Roughly 10 to 20% more from here. And silver is probably, it may give a shocker of doubling from here. I do not have any clue on that. A lot of people who are an expert, they have booked profits. I have been also telling people to book some profits.
Partial profits.
But now we become attached to it because we always have this tendency that which has gone up will go further up. Yes, it will, or it might. But look at the history of silver. It is not 100x in 10 years or 20 years. It's a commodity. And if it is that great, by just keeping money somewhere, you will make a lot of money. Like in Dubai properties. Prices are just moving like anything. You go to somebody and you want to buy it, let's say 4.5 million dirham. After 2 weeks, he will say 4.7 million. What has changed?
Correct.
Demand supply gap. Okay. Now he's saying, now I don't want to sell. Fine. This is absolutely a sign of greed. Now, you will be always alone in this type of situation. So 2.5 years ago, I was shouting and on the street, buy silver, buy gold. If you read my writings, which you have access to, I have written over there. People were not listening. But I'm sure the institution have done that. All the banks have done it. So it's a clear-cut sign. When the interest rate goes down, that is the only tool today left to control inflation.
Inflation, yeah.
Now, if the inflation is not controlled, and even if I make 5% or 4% in the fixed dollars, I'm actually losing the money because my real interest rate is negative. Now, my real interest is negative, you're still taking it down. So it is going further down. So what will I do? I'll go to a currency or let's say which is acceptable to the world, and gold and silver. So there is a very good saying that Bible mentioned gold 100 times and value investing not even once. So we ask our friend to check how many times Bible mentions silver. So and then comes to one very interesting thing I'll tell you. So you know that gold is called in the Latin it is what is called. In the chemistry, we have that periodic table.
Yes.
So gold is actually AU.
AU.
Yeah. AU means aurum. And silver is AG. AG is argentum. Now, who is argentum? Any close name in the olden days?
Except Argentina as a country, I do not know.
Okay, so that's a good one. The second is Arjun. Now, it is very strange to you. But do you know what kind of clothes he was wearing in the Mahabharata we watched? Which color?
Typically gold, white and gold.
That gold belongs to somebody else. Gold is superior to silver, right? So who has this silver color clothes? Ideally, who's the second best character in Mahabharata?
There's so many of them now.
Second best.
And everybody has their own perspective of looking at who the best was and who the
But
second
whose
best
story
was.
it was?
Krishna and Arjun.
Correct. So who should be gold? Who should be silver?
Ideally, Krishna should have been.
Right.
Yeah.
So Argentum is Arjun. AG, you go and check his clothes, silver clothes.
Okay.
How is it happening? I don't know. The only reason I can understand is silver depicts purity. When you are pure, you will get the highest consciousness or the highest consciousness support. And gold is even one category higher, which is aura, which is pitambar, yellow. And if you look at Lord Krishna, he was wearing yellow throughout.
Wow, that's a completely different perspective.
Right. Now, it is that old. Whether it is Raja Maharaja of India, whether it is the kings and queens of the Rome. If you look at this episode called Spartacus, every deal of arms were happening in gold and silver. So they are the oldest accepted currencies in the world.
Interesting.
Yeah. So that goes very deep. So history is an amazing teacher, and it rhymes. So now coming to this, I will say retail investors should not overboard. They should not borrow and buy silver and gold. I always tell people that I do not want to make my life so that last year we delivered 35%. Did I take the credit? I never take a credit. This year, what will happen? I don't know. I'm telling everybody, be prepared for 20% volatility. People are looking at me like, they
Why
think
should
like,
this
it is their right to make 35% again. I am not a genius. I know this.
It's like somebody tastes blood once, you do
Correct.
it again.
So
right?
we were very happy when we were making 5% for people in bonds in the banking days. Today, if I make you 15, you want 16. If I give you 20, you want 25. And some of my fund manager friends have done much better than me. And some of them would have done lower than me. At the end of the day, did I beat inflation? Did I beat bond? That's more important. So I think let's organize life around what will happen. When will it happen? Nobody knows. So I tell everybody, if you are happy with me, please write to Trump and give him, give my
Thank
regards
him,
to him. Nah. Give the money to me and give credit to him.
No, absolutely. So let's change tracks from here, Bhuvan, and understand the philosophy of investing, right? So retail investors, a lot of them rely on either ChatGPT or WhatsApp University for information. And there have been a lot of forwards that go around saying that the charges that come in the process
This
of
is the
investing when you go through.
hottest topic.
Yeah, absolutely. Whether it is mutual funds, whether it is PMS, whether it is AIFs, whether it is
Elon Musk.
Anything.
No, whether it is Elon Musk.
Yeah.
You approved a $1 trillion of package for him. So highest charge you're paying. And the board chair was actually folding hand to everybody and they approved it.
Seriously.
Yeah. So there's a reason behind it. Yeah.
Correct.
Yeah.
So what is the thought process? So I have always had that philosophy that if you do your investing yourselves, you tend to become very emotional with your money, and emotions then cloud the decisions that you take. But what is your view about the benefits of investing through somebody who's an expert in the field? What are the benefits that a retail investor can get, and why should they not cloud their decision based on the charges that they have to pay for those investments?
Okay. So see, charges. Why do people charge, first of all? Now, Rajesh, you know that even this podcast require money. Everything today, even if you go to temple, even if you want to, let's say, be close to a guru, you need to do something. Now, either you do financially, physically, or you could be a great leader. Even that requires money. Even election needs money. What did Trump do? Trump pledged $45 million. Anybody who had some indemnity, they will sign. And ultimately, indirectly, he favored Trump. And look at the return he has made. But do you think Elon Musk is doing it for money? Jeff Bezos is doing it for money? Warren Buffett has $200 billion personal net worth, $350 billion in cash. Do you think he's doing for money? I think for some people, $1 million is enough. Some people, it is $1 billion. But after a point, money loses its relevance. And every day I tell myself that I made money. What should I do? At the end of the day, I have to be humble. I need to understand that this money will not go with me. Yeah. What can you do? All you can do with money is you can become better. You can hire more people. You can, let's say my friend, I now, one of my friend is with me in the business. Now he will go and work with Reliance and he will make Reliance bigger. When he can work for Reliance and Amazon, why can't he work for me? So obviously one is the reason for money. So coming to the charges, I think any charge is fine as long as it is justified. So let's say I charge you 5% fixed, but then I give you 10% guaranteed return and you are for the same risk you are getting 3%. It's very comparative. Charges should not cloud us, but charges do cloud us when we have less of it. So a lot of people stay in Sharjah and they go to Abu Dhabi every day. What do you feel about them? 3 hours just going
Difficult,
and coming,
yeah.
right? I have done that in Bangalore. 1 hour I used to go to my office and come back, and I used to feel like a factory worker. Time is today biggest currency, and they say that in the future money will not be there. And if the reason why time is very important because you have to invest in becoming better. And I think every charge is fine if it is justified, legitimate, open, legal. Regulator is doing their job day in, day out. And I also want people to know that charges are okay. Be transparent. So there is a hedge fund which charges 5% fixed fee and 45% performance fee and doesn't take money. What will you do now? It does not take money. And the track record is roughly 45% gross return for the last 15, 20 years. Jimmy Simons, we all know.
Right.
So charges are absolutely a very private discussion, but it should not cloud. So whenever I see somebody, so let's say look at the podcast quality. So if I pay more and if I look for a right podcast studio and editing, I will have to pay more. What I have to see that, am I worthy of it? Are they worthy of me? What impact it will put on my audience? So I think as a nation, we're all penny wise, pound foolish. And I have a very beautiful saying that in my father-in-law's word, my father is a spendthrift. In my father's word, I am a spendthrift. But I stay in Dubai. He stays in a capital city, and my father-in-law stays in a small city. Now, for a barber's haircut, they pay 20 rupees. When my father's city is 100 rupees. And Dubai, it is minimum 25 to 30 dirham, which is 3 times, or let's say.
Right.
And I'll not say he's wrong. They all are correct from their perspective. So it should not cloud. I will recommend everybody, like our good friend late Siddharth Bhaiya. He delivered 33% return. And I think you have a closer experience. In the last phases, he started telling that I will take 25 crores. I won't tell you where I'm putting the money. That has put a lot of people put off. But when today he's no more, when I talk to people, every other person has given him money. So at the end of the day, he has proven himself. Now, even if he charged you and he would have made 27% return, he's still on the top of charts in the Indian perspective. So I think it is the behavior, the way we have been trained. In fact, let's say if you're Gujarati, with all due respect to Gujaratis, the moment you tell them something, oh, it's very costly. Understand it first. Leave the price behind. Like I had one of my colleagues tells me that I generally tend to buy books which are 100 rupees plus. After that, it is difficult for my mind to comprehend. But then he will never be buying a book from the best author who want to sell that book for $1,000.
Correct.
So it all depends what you want. And sometimes it is not the course, it is that person. Like Simon Sinek, I wanted to organize, it's $100,000. Now some people say he's fool. But majority of the people have liked his thought process, including me. So if it is $100,000, my job is to see how this is possible. So I realized that I met people, so I have to meet people and see a guest. And he said, $1,000 for Simon Sinek, we'll pay. So divide the cost in 100 people and do
actually,
it.
yeah.
So sir, it's very simple. That why it is happening, because you have been trained that way. Right? But then why the same Asian people send their children to America and pay $100,000 per year? Because then they feel the brand. So brand commands the prices. Obviously, we also want to reduce our charges. And for that, we have very simple saying that I think we have promised everybody. And this is the year we're working on it. So we are telling them a very simple thing. It's a big decision we are taking our part to dilute our shares. Come and invest in the business at the shareholding level. Your fee becomes 0. So everything is possible, everything is available, but when you invest in the company level, the patience capital become permanent capital.
Permanent capital. That's right.
So Rajesh, this is a behavior challenge.
But then how do you bring this message to youngsters, right? People who want to start their investing journey and mind that they also have today tools available at their disposal, which they think are smarter than anybody else in terms of either giving recommendations, suggestions, options, comparisons, and so on and so forth. So in this world, does advice have value? And how do you convince these youngsters to start their journey early on in their careers so that they have a longer runway for compounding?
So Rajeshji, the challenge, I think a regulator should listen to this podcast. When you or I have a, let's say, some chest pain, what do?
Go to the doctor.
Which doctor? The new one? Or the ChatGPT advisor?
No, absolutely.
So where will you go?
The family doctor or
Family doctor.
the specialist.
The specialist. How do you find a specialist?
By experience, by reference.
You ask 5 people who have done the heart surgery or who have gone through the heart surgery, right? You will go to the best. So my brother-in-law took my father-in-law to, let's say, Narayan Hospital in let's say, Nagpur. My cousin went to the same hospital. Now, my hometown has a good hospital. But for that, you will go all the way because it is physical health. Or I'll say, it is physical wealth. But when you have to make money, you will, first thing you open an account with a zero discounting broker and start experimenting because you're allowed to cheat. You can just buy a share from somebody else. But if you want to operate your own heart, even if let's say 4 people around here, either you're criminal, then you will do it because you can't access to the hospital, but you will not do this because it's very fatal. So if you understand, I'm sure you understand Six Sigma and all. So even if I know how to operate a flight, I will not dare to do that. I'll still take all the precautions. So first question is the youngsters have to understand the money doesn't belong to them. And a lot of parents approach me that I want to send my child to you and please train him in trading. Now we don't have the trading screen only in the office. Now you go to office, a fancy trading screen, we don't have it.
Okay.
I don't remember if I've traded in the last 1.5 year. And I would tell all people that more you sit in front of the system, except you're an expert hedge fund manager, you will lose money. And by the way, as we talk, one of my friend has lost money to people in a hedge fund. And it is regulated in a very good jurisdiction. Expert lose money. And I think SEBI also came out with 95% people lose money in the derivatives.
Yes.
Now, when you give Bandar ke haath mein us tarah, what he will do? He will lose money. So, what regulators should do, make sure that even if you're investing your own money, you have to clear the exams. If I want to manage your money, there are criteria. I won't get a license if I do not have the certain track record, which means I have not lost money, faith, people, seen the cycles. But when you want to invest your own money, regulator just trusts you that you understand equity, you don't understand mutual fund, etc. So this is something which if I have at all regulator listens to me and I become part of it, every regulator I'll say, when they open the brokerage account, let them pay a small fee and clear the exam. If they want to do derivatives, let them give that exam just by asking tick, 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 which they don't even see because account is opened by somebody else.
On your behalf.
All they get is your ID password.
Right.
So that is the best way to do it. And definitely I teach and the reason I teach is that people don't lose money. The challenge is I'm not doing it on YouTube. And probably people like Rachna are doing that job. Rachna, the younger generation is doing a commendable job. So I think, but the only problem is if it is free, again, you will not watch it. So I think it is, I'm sure a lot of people are teaching now, but this is the world, illusion. People would like to take their own decision because the moment we get the money, it is mine. And the moment you have that ego, that it is mine, God will say, okay, it is yours, no? It will be destroyed. And it has happened with me many times. I'm sure it has happened with you also.
Oh, it has,
so I think just to summarize, regulator should make it mandatory if somebody is investing, they go through the exams, one. The second is like people like Rachna who have decided, because younger generation doesn't want to manage your money. They don't have patience to listen to you. You tell them, that, okay, sorry, I don't want it. So they are smart. They went to YouTube. They started giving knowledge, and then they are teaching you the same course, and they're teaching online, and they're reaching to the wider audience. So I think they're doing a decent job.
Right.
So the younger generation should subscribe to these kind of things. One, they can read books, and there are people like Sonia Shenoy, she's also taking very good interviews of very good fund managers. So even that one can listen. The only challenge in the YouTube University is either you are here and there. Are you capable enough to take that knowledge as you are walking, or you are into different things? And that is why I believe that a paid setup, focused setup, and when you make notes and give exam is still better.
It absolutely is. And I've seen you've also been into this process of doing master classes around finance. You want to say something?
Yeah, I'm
about
doing it, but I think I still want to reach to the wider audience. We would like to do in a manner that it reaches more people. And yes, we're doing it. We've done our bit. We've taught more than 100 students. And we're still right now going through that red tapeism where people have excuses and this and that. But yes, I have promised to myself that the reason why I'm in business is to only one reason, that people should not lose money. Our business is working fine with your help and people like you. It will grow. The goal I am into the investing business is only one. People should not lose money, because the challenge here, Rajesh ji, if people lose money by even a competitor, like we know a lot of companies have run away, the story is heard by us. We are there to listen to it, whether it is insurance, investment or finance. We do not want to hear those stories. And that is why we're very clear that one part of the profit will always go to educate people how not to lose money. So we are committed to it.
Makes sense.
Yeah.
So as we come towards the conclusion of this podcast, Bhuvan, what is your one mantra for making long-term wealth?
So I think wealth is virtues. Whatever, let's say suppose somebody's net worth is $5 million or $10 million. Don't look at his money. Look how he got this money. So I think the best people who have the money is saints. Now, again, we can have a debate that some of them are con men, etc. Leave all that con men, because every industry has con men. Look at the 5% of them, whoever you want to look at it. They're fit. In fact, they ride motor bicycle. They stay in the US for roughly 6 months plus. Countries call them, they have ability to handle 100,000 people, etc. And it could be Buffett, it could be Elon Musk. Elon Musk is not a great speaker, if you look at how many clashes he has. But when he speaks, it is like somebody who is working on something extraordinary speaking. So it's great to learn from those people. So focus on a solution, the money will come. Now this is for the entrepreneurs and businessmen. Coming to the wealth, what kind of virtue I should have? Do I speak the truth? Now, let's say I talk about a product and I say that these are the fees. 90% people don't come back. If fee is the issue, tell him. And he will give you the reasoning. Now, let's say you do not understand the proposition. Involve one of your friend who is more knowledgeable than you and finish it off. People never have a deadline to create wealth. Because Apple तो ले लेंगे ना. Public equity है.
Right.
कभी भी ले लेंगे. और बीच में बेच करके will buy the property. तो ये Apple तो फिर available है ना. And we have this very good experience that people who leave equity market once at loss, they never come back.
It's a permanent scar that is left somehow.
Absolutely. And every time you'll enter because of the behavior bias. And what is that behavior bias? That everything is going up. I am at FOMO. So I will buy that. The moment I'll buy Apple or gold or silver, in the next 1 or 2 years, it will drastically go down. I will not be able to bear the losses because I'm attached to it. So virtues are required.
Yeah.
If I would have understood why I'm buying it, what is the reason I want to hold it, and how this is going to work for me, and if it goes down further, is it quality or worth to put in more money, I will actually make money. So everyone, including me, you will lose money for the first time. And if that loss, that first cycle, if we have the ability to hold on or put in more money, then we will marry to the markets. So virtues are the most important. Acquire those virtues, the wealth will come. Simple thing. We're doing this podcast. Now, why are we giving knowledge for free? That's the virtue. You should not be charging it for knowledge. Now, if people get benefited, they will approach us. Now somebody might approach us to take an interview. Somebody wants to approach us to make us better. Somebody wants to approach us to help them to grow wealth. And automatically wealth will be made. So if you acquire virtues, like you are one of those, by the way, you're not only invested and made money with people like us, you also, your whole circle you have influence, whether it is your sister-in-law or your brother and cousin. I think you are yourself is a multi-family office, I'll say. And now I also heard that you are also preparing for some exams.
I am.
Yeah. So that's what people should do to create wealth. So I think you are yourself is an answer to create wealth.
Yeah, because see, virtues, and because you touched upon virtues, what people don't understand a lot of times is it's not buy and sell both, but at a lot of times, say for example, real estate, right? You essentially make money in real estate when you buy at the right price, and not about
In anything.
how much you hold, and
In anything.
yeah,
Anything you always make money when you buy first.
at the right price,
Yeah, it's the right value. I'll not say price.
Right value,
Because
yeah.
people don't know the value of it. People just buy because so a $10 stock looks cheaper than a $100 stock. People ask me whenever I go to this conference of Buffett every year, they say, "Oh, you own Buffett stock?" So I said, "Yeah, I own it, but what? Why? What happened? Oh, that's very costly." Huh? Says, "How much?" $400,000 one share. Then I tell them, "Look, there is a Class B share also, which is $500, and I only own that stock." So this is the kind of confusion mark people have. So this is very different. People judge the book by its cover. That's absolutely true. Today, what's happening? We have been told to make a 30-second Instagram reel. Why? Because people don't have attention span.
absolutely.
Why don't we work and tell these people to have higher attention span? So people who have this delayed gratification, even if our children can sit down for 1 hour, or they can read 10 pages a day, or they can watch a proper podcast for 1 hour or half an hour and make notes, they will be filthy rich. So how to choose a good fund manager? Look at who have been the great fund manager. Order their books. Or go to some libraries, get them for free. Just sit down with yourself, 10 pages you read every day. And I think there's YouTube now, there's a lot of this ad comes. No, I think it is misleading, but the ad comes. Disappear. And master this
Micro-learning, yeah.
30,
Yes,
what do you call the AI apps.
Tools, yeah.
I will say, sit down with yourself, read one verse of Bhagavad Gita. That's one. Or let's say read 10 pages of a great investing book written those days. It could be of Ben Graham or Buffett letters, or could be Charlie Munger's book on Charlie Munger, the Almanac. After 3 months, that misleading ad which is coming, and what I am telling you, this will change people's life. So all I do, and again, should have a role model. So Buffett said you should have a role model, you should have a mentor. So I'm sure we both have studied well in the school and college, but who taught us to continue to study? These people told me that if you study, he studies actually. Today also he studies 5 or 6 hours, his calendar is empty. So there was a time my calendar was full. And slowly, my only purpose to go to office is to read. So I would like to read because as a leader, I have to guide my team.
Absolutely.
So I read a book called, I'm reading a book, 10x is easier than 2x by Dan Sullivan. That is an interesting thing. When I read the book, I said, oh, this is the book I needed. And then whole office, we organized a session, we went, took them to library. They all have gone through it.
Wow.
And we now tell our employees, you want double the salary, take it. And take the
Company
what do you call
10x.
take the company 10x. So now my challenge is something else, that my employees are saying, no, we don't want double X salary. Where in every other company, you struggle to even get 10% hike.
Correct.
We all have to deliver. We have to understand that. And how will we do it? By increasing our capacity. How will we increase the capacity? By not looking there. 3 fingers are pointing to me. We all have to become better, let's say 1% every day. Which I think, Rajesh, you also do.
Yes.
That's why we are here. So every day, just try to become little better before we go to bed. That's life.
Absolutely. Thank you so much. And I think big wars, you referred to Arjuna and Krishna in the early part of the conversation. And such a big war was won because of the right guidance that Krishna gave on the battlefield, right? And I believe financial advisors are those kind of margdarshaks to the investors who essentially show them the right path in terms of your journey for investing? And
Sorry.
Closing note on that for your views and
No, Rajesh said the comparison is wrong. Krishna is beyond all the advisors. He's actually one, not only advisor, he says Yog Kshemam Vahamyam, which he means that if you will not do it, I will do it. Advisor doesn't have that capacity. Fund manager has that capacity, but still we are no one close to Krishna, because the problem is none of us are close to Arjun also. So that's a different thing. Because if you have all that, you don't need fund managers, you don't need anybody.
Correct.
Right. So these are a different example. I'll say advisors who are open to you, they charge you. Anybody who charges you is going to be truthful to you.
Right.
You know the difference between broker and the advisors.
And they become your representatives to the
Yes,
market rather than
yes,
the other way around.
Yes. So I always tell, if somebody is not regulated, he doesn't have the guts to be regulated. Then why is he with you? But you I am helping him. I'll give him some 1 crore rupees and he gives me personalized services. But sir, he's not regulated because he feels that regulator is himself corrupt or is unjustified to them. All the regulators are like that? No. So regulation is made for protection of the customer. And that is why this is very important to understand that the one advisor has to be regulated. He should be ethical to you. And in fact, we should work on platforms where we can list advisors like Uber drivers. So there's no comparison to Krishna. That's my ending point. All I'm saying is you need an advisor, and even he can go wrong. So with the right advisor, he will come to you, he will apologize to you, and you should give him a second chance. So I think thank you so much.
And thank you so much for this wonderful conversation. I'm sure the audience would learn a lot of things from this conversation, and looking forward to speak to you again.
Thank you.
Thank you so much.
Yeah.